Forex trade signals, the best Forex trade signals based on market structure and volume. Today we're going to have fun. We're going to do a little quiz, see if you get it right. So put your technical analysis prowess to the test. So the market comes down, goes back up, comes down a bit, and now it's going sideways. So we're at the right edge of the screen where we would have to take a trade, or could take a trade. And here is your mission if you choose to accept it. What do you think the market's going to do from here? This is your quiz. Is the market going to go up, down, or continue going roughly sideways, kind of chopping sideways? In fact, if you want to make it real interesting, in the comments below, go ahead and type in, what do you think the market's going to do from here? Up, down, or chopping sideways? And commit to it like you would if you were taking a real trade, because that's what we have to do when we're taking real trades with real money. We have to make a commitment. Be kind of fun to see what the results are we get. So in fact, if you want to pause it and do a little analysis and then start the video again before you answer, that's perfectly fine. But I'm going to keep going here. All right, so the next bar is up a little bit, a smidge. Not enough to make us, millionaires. No Lambos in our driveways yet. Okay, the next one, inside bar. So didn't really go up. Next one, another inside bar. So far we're chopping sideways. No Lambos. A little bit of a red bar. Again, still just kind of chopping sideways. Oh boy, now it's starting to go down. Are you serious? Oh wait, we got a big bar up. Okay, maybe the bulls are going to win this one. And oh god, dang it, we got a red bar, but again, didn't really go up or down much. Oh man, now it's going back down. And really, I think the answer is it's just going sideways. So it's just chopping around sideways. So if you said chopping sideways, you're a winner. If you said up or down, you're let's be polite, you're a non-winner. Now, one thing you may have looked at here is volume. Okay, I'm just going to anticipate that a lot of people looked at this big volume coming into the market, whereas before that, it had been pretty flat. And perhaps some of you said, ooh, big bullish volume coming in, green volume, and therefore the market's going to go up. That's an impetus for it to go up. And of course, that did not really happen. It just went basically sideways in this channel. Why would that be? You know why it is? It's because volume on spot Forex is not very reliable. That is one of the reasons why. Let me show you what I mean by that. Let me give you some examples. What's the difference between these two charts? First of all, notice that they are both the euro. They're both 30-minute charts. The only difference is the data feed, who they are coming through, different companies. Now, on these two, exact same time, and we did get a bit of volume coming in on both of them at the same time, but this one is red volume, which might make you think bearish. This one's green volume, which might make you think bullish. And the only reason for that is because on this one, the close was below the open, and in this one, the close was above the open, and that's how this is color-coded for volume. So, very different things, very different signals depending on which platform you're using. Okay, let me show you one more thing that might even be more astonishing. Forex in the futures market is traded through here, the CME, a central exchange, whereas spot Forex is not traded through a central exchange. And that's one of the reasons that you'll get little variations in the volume and even prices a little bit. It's pretty efficient, pretty similar, but it's not exactly the same through all data feeds because there is no central exchange where all the data of the entire world goes through. Whereas on at least this futures exchange, the Chicago Mercantile Exchange, pretty huge, it does go through one exchange. And so now, this is going to get really tricky for you. Thought you were confused before. So this volume here does not match up. Let's look. Actually, let me take that off of there and show you my crosshairs. So if you see my crosshairs and where they align on the spot Forex on the right and the futures Forex on the left, there's no big volume spike there. So let me line that up for you visually. So nope, it's low volume. So what the heck? Now, some people will tell you, and it's not necessarily a bad practice, that if you want to see Forex volume in a more universal way, use the futures market. And that's not a bad idea, but here's the trick within the trick. The trick within the trick is that if you're going to do that, and again, not a bad idea, but What they don't tell you sometimes is that the futures market halts trading. So it halts depending on the time you are in the world. But in fact, actually the easiest way for me to show you is this. If I hover over this and you see the crosshairs on both, see at the chart on the right, the spot Forex, 1400 hours military time. The chart on the left, even though the crosshairs match, it's 1500 hours. So it's an hour difference. It's an hour difference. And that's because the futures market does close at that time. And then it reopens, right after that. But it is not open during this candle. In fact, if we go back to here and we go back one more, look, it's 1330. So 1330 jumps, and I'm looking at the chart on the left, 1330 jumps to 1500. And therefore, there is no data during that period of time, actually, even though the crosshairs line up. And finally, one last example as to where the futures Forex market sometimes can give you a little better signal on the volume, especially. If we look at this bar right here, we see with this bar coming up, breaking this high right there, okay, boom, the volume has broken the previous high of volume. And so we're seeing real strength in volume there. If we look at the corresponding bar over here on the spot Forex, again, the price action is pretty much the same as we break that high on price, but we do not break the high on volume. So if you look at the corresponding volume underneath that bar, it is actually a little bit lower. So looking at the futures actually indicates, there is extra strength in buying contracts on this move up, on this breakout. And that's a good signal of strength of the market following through on the breakout instead of getting a fake out. Whereas on the spot Forex volume, that indication was not there. And this is why a lot of people like to use the volume on the futures contracts exchange that is centralized. So that's it. Now, these are great things to use. In addition to this, of course, you want to use timing, because a lot of people don't use timing in their trading, which is ridiculous. So if you want to add even more of an edge on your Forex trading or stocks, futures, whatever, cryptocurrencies, by the way, you want to add my cycle indicator, which is my market timing indicator. And you can get that for free at indicatorwebinar.com. I've recorded it now so that you can watch it at your convenience. Give you the indicator, which is a modified common indicator, by the way. And then I show you how to trade it. There's a specific technique for trading it, a pattern you trade on it, and really everything that you need to know. Absolutely free to my viewers of my channel. Go get it and enjoy.